So I've been doing this for a long time, and people come up to me and they're very nice and say, Ozzie, you're going to say the same thing? Well, what do you expect me to do? All of a sudden say, you know what, I have a big surprise tonight. We're going down, you know. No, I am positive about real estate. But, you know, it's a crazy world. You know, we have a different perspectives. You know, this is the house that you have, and that's how you see it. This is what the buyer sees. This is what your lender sees. This is what your appraiser sees. And that's what the tax assessment. So we have all these different perspectives out there, or people have their own view of the world. But it is a crazy world. This slide and all of our events have been showing, this is my opening slide, and every year something unique happens, right? So we have a credit crunch and a wealth tax and a bubble and a Brexit and Trump and inflation and all of those kind of stuff is going on. And against that environment, we have to sort of fight with ourselves, who we actually gamble and put some money in real estate or put some money in the stock market and so on. And listen to the pundits can drive you crazy, because the pundits don't know either. Look at the developers take down all the trees on the street and then call it Elm Avenue and Pine Holidays, you know. So and then you look at the economists. Are the economists any help? Economists know 100 ways to seduce a woman, but they don't know any women. Okay, I get it, Jerry. The life joke is done, right? Jerry said, don't tell that old couple. But there's a lot of fear. In all of those events that we have, there's a lot of fear. And that fear is starting to go into Vancouver. It's kind of amazing when you consider that we had 100% price increases, when you have a 20% increase in Surrey. Yeah, but last year it was 30%. You know, the thing is, what are we expecting, right? What are we scared about? Remember, we had a Mexican crisis, an Asian flu, a currency crisis, an economic collapse. We had, in 1994, we had in Sweden a 500% interest rate on an overnight basis. So all of these crises, if you did nothing else, but in the middle of that crisis, went and bought a house. And you didn't have to buy it on the west side. You could have bought it anywhere in Vancouver. You would have outperformed all markets because of the variety of factors. Buying a house was better always, right? When everybody else said, that's time for the hills. I was saying to the group last night, we had 130 people out at the Alton Club, that I wrote once a story and assembled all the titles of books that people had written about depression, monetary crisis, deflation, collapse. There were 63 or 64 of them. They were scary books. I was admiring them because they sold 1 million copies each, right? I mean, hey, I'm going to sell. I sell 20,000, they sell 1 million. I have admiration for them. But one thing they had in common, it didn't happen. None of it happened. Harry Dent's last famous negative book was The Great Depression of 2010. I had dinner with him in 2013. I said, what happened? Well, I have a new book, he says. It's called The Depression. No more dates. This is the reality. This is 1980. That was 2012. I have, throughout it all, actually, you add another climber up here. It's about 1 million, 2 million. Yes, we went through some periods of time. That was the economic correction that we had in 2008. And throughout it all, we were peppered with unhappy people saying, it's over, it's the end of the world. It'll never come back again, and you don't know what you're talking about. And so when you take a look though, what you could have done in 1980, you could have bought a $100,000 house with 5,000 down, and you would have made this outlandish return, 21,700%. I had to use the Simon Fraser professor actually do the numbers because they're really outlandish. But this led me to believe in 1928 when I wrote my book, Forget About Location, that if we kept printing money the way we did from 1965 to 1998, for 35 years, and we went from the price that was then 13,500 to 278,000, and we extrapolated that for the 35 years in the future from 1998, every house in Vancouver would be, by the year 2023, would be worth $6 million. And people thought, what is he smoking? The average price was 278,000. And yet last year, the house on the west side clocked in at 4.4 million. It has reversed a little, but boy, did we ever move up. And what is the reason? It's strictly the creation of money out of thin air, and that competes with the money you and I earn, and it settles down in hard assets. And all it is zeros getting added on. I mean, in New York, they just sold a painting a couple of months ago for $460 million. I don't even know for sure that it was painted by Da Vinci. Can you imagine? So that's inflation. So the basic things I always look at are, on a macro perspective, are we going to have inflation or deflation? And those of you that have come to my conferences, that's my theme. And I go at great lengths, which I won't bore you with here today, to come up to my conclusion, because there is a question now on whether the Fed is taking actually money out of the market, all those wonderful things. I believe that we're still going to be in a highly inflationary world. And as long as we have inflation, it settles down in hard assets, not just real estate, but it's my hard asset of choice. You should also look at the timing, the trend. We do have cycles. And then locally, the inward migration, and people go where the jobs are, or where the lifestyle is. And values go where people go. And so you have to have certain understanding of that, because in the end, you make the most money on the day you buy. And so it's a mad world. And people say, well, I always talk about Jurock or a different world. Well, the world is crazy. This slide is 4 years or 5 years old, where I said that the outcome is always that the rich will continue to look to park their money somewhere. They continue to flee emerging markets and collapsing currencies and are stampeding into worldwide real estate, particularly at the high end, in London, in New York, in Hong Kong, in Vancouver, in Toronto, and all of these areas. And the reason is very simple. The currencies are being debased. Now, this slide came long ahead of the current collapse that we're actually experiencing in the emerging markets. When the Indian currency last year at an all-time record low. So the rich will buy anything to fix the value. There were more Rolls Royces sold in Russia in the last 2 years than any other time in their history, because the oligarch rather had a Rolls Royce than this collapsing ruble. So why is that important? Well, Brexit proved that polls don't work. People are fed up with the establishment, and so why do we care? It brings a lot more money here from Europe and from Asia, of course. And so, well, it's the Chinese money that drives everything. No way. West Vancouver is owned by the Iranians. And the Royal Center was bought by a German industrialist for $432 million. We have a lot of players in this market. Why is it important? If we're interested in real estate as investors, and we see a lot of money coming here, then that will stabilize our market. Now, one of the reasons is, of course, that the foreigners go to their bankers and saying, where should I put my money? And we it was just I do that too sometimes. But there is an organization called the AFI. That's an organization for foreign investors, and they rate countries on a whole bunch of criteria. But we are rated as the safest country in the top 3, the number 3. We were number 11 a few years ago. Now it's US, Germany, and then Canada. So the guy goes to his banker in Dubai and says, where should I put my money? I should look at Canada. I think, David, you told a story a few months ago about what one of your clients felt the important thing was to put money in the bank on a Friday, $4 million. On Monday, they were still there. Whereas where he was living, he would go and put the money in the bank on a Friday, ran afoul a party official on a Saturday, and it was no longer there on a Monday, right? So the important thing wasn't even making money, just putting money here. So what's next? You know, what are we? Well, we are the boomer generation, and yes, you're long-suffering followers of mine. We used to be yuppies, you know, the young urban professionals in our BMWs. And then we came the dinks, dual income, no kids. And then we came the dins, and we moved into Yalta, dual income, no sex. It was time, right? But then we became the geeks, the Viagra enhanced excited people. And you got to go with these guys and gals, because yes, it's guys and girls, I understand, not from experience. Better stop this. But the point is, people are out there, they're buying that second property. But I really like those mommies, you know, these guys, middle-aged men in spandex, you know. And if you're none of these, you're a dildo. Dual income little dog owner. You see them everywhere. Somebody's Max, the jokes. Yeah, it's about it. You've heard it, I know what it is. All right, but we are really becoming also the millennial generation. You know, we are the Henrys. High expenses, not rich yet. They are net generation as teenagers, digital natives, Generation Y, the echo boom. There are roughly 9 million of them that are born between 1980 and 2000, and they think differently, they communicate differently, and they're changing the way the world works. They are more informal, they don't pick answers from their professionals, and they need help from their parents. And they're smart enough to still live with them as well. So we have the boomers, and we have the millennials, and they look for different things. You know, the funny thing about the boomers is that we always look at the old couple, they're walking around, and they're holding hands. You know, it's so nice, these old people walking around holding hands. One of the fellows walked up to the old guy and says, look, I admire you. You're walking with your wife, and obviously, you know, you're 7 years old, hanging on to her. No, he says, you don't get it. He says, I don't let go of her hand because if I do, she goes shopping. Anyway, so the point is very clear. We believe there will be more inflation. If you believe, like I do, that inflation is the outcome, it's interesting. All of our numbers, even the so-called core, we have core inflation and headline inflation. All this, I talk strictly price inflation. Things cost more. Last year, cauliflower was $8, now it's down to only $6. Look at all the things that go up from parking to your fees to you name it. I won't go into details, but the point is, more inflation is in my view the outcome. If you believe that, that should give you backbone. Then it only comes to select well-selected real estate, not the question of whether you should own real estate. It's well-selected. In 2008, I was visited by a couple. They had a lot on the west side on 33rd Avenue, which had been worth about $1.2 million, and they had an offer of $900,000. And should they sell? And I said, like I would tell everybody, what are you going to do with the money? Do you have a better place to put it than what it is in already? That's the only question you should ask yourself, because you know what you own, right? I know I own this, I know it's pimples, I know it makes me mad in the middle of the night, whatever. But if I don't have anywhere else to put my money, I'd rather keep what I have, because I know it. But she persuaded him to sell. It sold for $900,000, and 9 months later it was worth $1.4 million. You see, the cycles, I think, go a little faster. We used to think there was sort of an 18 months downturn, which we had in 1998. We had a 4-year downturn in 1981, but that was more of the 16% variety. Imagine, Canada savings bonds paid 19%. We said we don't want it, we want to make more. Unbelievable. Point is, you know, we have more inflation. If you believe that, you should be comfortable. Because real estate is a physical asset, it's local in nature, you can control it, you have leverage. You know, we always talk, when I read just the Tony Robbins real estate book, nowhere does it mention leverage. He only talks about the person that has hundreds of millions of dollars and pays $1 million for the house. It goes up by 50,000, he made 5%. The person actually put down 200, made 25%. So the point, leverage is good. It produces an income. Over half of the payment today goes towards yourself, goes into your genes. So it's good for that. You can assign it, you can mortgage it, you can rent it out, you can lend on it, you can grow stuff on it, you can leverage it. In the US, in the further capital gain, we have a lot of our clients in the United States that can portage their capital gain into a new property. In Canada, even in investment, you can lay your capital gain over a 5-year period by carrying a mortgage, and so you have options. So if we believe that, or you believe that inflation is the outcome, then there's a question, if real estate is it, should I keep what I own and or should I wait? Somebody asked me in the hallway, said, Ozzie, when is it going to go up again? And I said, well, it's March 31st at 8 o'clock. And he had a follow-up. He said, no, what do you mean? What do you think? I just told you, March 31st, who knows, right? I mean, come on, there's so many factors that we have. We have economic factors going on that affect the Canadian dollar. I predict the Canadian dollar will see 73 cents by year end. I predict oil will go down to below $60 by year end in tax law selling for the middle of December. But do I know for sure? Who knows? You know, you look at the factors. I think the Canadian dollar is going to go up, then we have a NAFTA agreement, which we probably will have in the next 2 weeks. There will be some sort of an agreement, I'm absolutely convinced of it. So that'll be good for the dollar, but then it'll go down. So let's look at the numbers. Now most of you know these numbers, I won't belabor them. Vancouver has a 36% decline in volume in all our assets, whether it's condos or townhouses or detached homes. And listings are up in the overall by 24%, but the big increase is in condos. Vancouver has a 61% increase in condos. Now, if you wanted to buy a condo, is that a good thing or a bad thing? It's a good thing. You know, the crazy thing is that when the market goes up like mad, more and more and more and higher, people rush in and let me buy this. When it goes down, they say, well, I'm going to wait. Wait. We don't buy at the bottom. We wait till it goes back up again. But the point is, yes, the condo market in Vancouver has been excessively increased, and now it is going to go down further. No question about it. We'll have a price decline. If you look on the west side, the average price dimension of 4.4 million is now 3.8, so we already had about a 21% price decline on the west side, at the very upper end. In the Fraser Valley, the average price is actually up about 8%. Listings are higher, sales are also down. But if you look at the condos, they're still up 20% in value. Now, the interesting thing there is for all of you that are investors who speculate in the valley, where there's still cash flow. In Toronto, the big collapse that was there was mostly in single-family homes. The prices in the condo market actually stayed up, particularly in the 905 area code, never went below 5%. So even though we may have all sorts of things going on in the single-family home market or fewer sales, the prices actually stayed relatively strong. So, but again, if you are looking at the numbers with the view of buying stuff, don't look at the valley numbers, look at a specific market in the valley. That might be in Langley, it might be in Surrey. I like Surrey. I was at lunch today at TransLink in Surrey. And it was very interesting what the chairman of TransLink was saying. 1.6 billion is in the Deans. In the next 10 years going to be spent. So we went from 250,000 people to 500,000 people in 20 years. He sees that double in the next 20 years. So to me, if values go where people go and people go where the jobs are, from an investment point of view, probably the whole region is good. Now it's up to you to actually choose out, get a quality realtor, make a lot of offers and get your own deal and have some backbone. If I look out of town, I like Kelowna, always have liked Kelowna. Kelowna was our #1 recommendation in our annual forecast of January 2017. The sales this month were down 24%, but the price for the single-family home is up 7%, the apartment is up 5%, but the active listings are higher too. The market is in balance, but like everywhere, almost right across the country, you're seeing a slowdown in sales and an increase in listings. And the reason is that markets become the stories people tell about. Wherever you go, somebody's saying, you know what, geez, I think this is different this time. I don't know how many of you subscribe to my Ozzie. You're going to sign up to the Ozzie, it's free. But part of the stuff I write about in the Ozzie about real estate is that we are all living our own lives based on what the people are thinking about in our circle. And so it's funny when I talk to somebody, I know this person watches Fox and this person watches CNN. They're almost polarized. I don't want to digress. The point is, I like the out of town. Kamloops right now is actually totally up in price for the first time. 14-year highs in sales increases, and the listings are going down. So it's counter-trending. So what's happening is that we see quite a few Vancouverites grabbing their $2 million from their wartime bungalow and go into a smaller town. The Sunshine Coast, which we had recommended on the radio probably for 6 years, those $1 million waterfront homes are now $1.8 million. The market has gone up and it's still there. So when you look at Kelowna or you go to Victoria, my goodness, Victoria, and the average price is still 7% higher on single-family prices. The apartments up 11%. And so throughout the marketplace, slowly you have a prevalent Vancouver of negatives that will go also into the smaller markets. So you have to be cautious, but that builds also opportunity. So if you go to, what happened to my Squamish slide? If you go to areas such as Squamish, we last year we bought the Pemberton Hotel, and I say we, my partners and I bought the Pemberton Hotel, because the whole corridor was aflame. You know, Whistler, of course, has gone absolutely berserk in the last few years. One of my friends had a condo that he paid $450,000 for 3 years ago. It's now $1.1 million. It's talk about price increase, it's gone absolutely berserk. So the Pemberton Hotel, we owned it for exactly 3 months because we also got a super deal on it. So that whole corridor from Bowen Island up to Pemberton. And why is it good there? Well, I mean, you take a look at the commute to Bowen is a 20-minute ferry. The commute to Squamish is 45 minutes. You can buy a 33-foot lot in West Vancouver for $1.8 million, or a house in Vancouver for $1.9 million on average. You can buy half an acre on Bowen for $500,000, or a house in Squamish for $700,000. So people make the 45-minute trip for lifestyle and for price. It's funny, there's actually in the 50 travel journeys in the world have been ranked. It has been ranked. The Sea to Sky Highway is in the 50 best places to travel in the whole world, ranked by this particular magazine. Oh, there's the slide. So as you can see, in August, the yellow is this year, and clearly we're not 2016, we're not 2017 here, but we are over 2017. So there we are. The thing is, the market is still there. It's not as hot and as wild as it was, but it's still there. And there's Campbell. So the baseline is we have to expect change. This is a changing world. It's a changing worldwide. I mean, people continuously ask me about Europe, and I write about Europe at length. 5 years ago, when everybody talked about Greece, I said, don't worry about Greece, worry about Italy, worry about France. France hasn't had a balanced budget since 1973. Worry about that. Who gives them all the money? And don't worry right now about Turkey. Worry about the 8 Spanish banks that lent $500 million to Turkey, and the $200 million that was lent by German banks. The world is really very, very interesting. But to me, that means that the money that's over there is actually looking for some other place to go. They're going to Australia, they're going to Canada, more than others. So the changes we expect, the constant is how do we adapt to it. But in my mind, as long as we print money or create the money that we do, and while the Federal Reserve says we're taking money back out, or rather not renewing the loans, Trump has increased the budget, military spending dramatically, huge infrastructure spending. All that money has to be created out of thin air. In my view, it's going to settle in inflation. Okay, the facts are, get used to it. It's a new world. People don't trust globalization anymore. They don't trust massive migration. They don't trust the establishment. There's a lot of mini Trumps all over the world, tired. So money will continue to flee here. And you say, well, what does that mean? Well, that means a lot. There's 180,000 Hong Kong Chinese with a Canadian passport. There's a huge Asian base that we have in the city that all have relatives overseas that are not necessarily enamored with the Chinese president that has elected himself for all of his life. And so there's more of that. Now look at what the numbers mean. Last year we actually increased the province by 65,981 people, biggest ever, of which some 10,202 came from interprovincial and 49,590 came from outside the country. Now most of these people that are coming, if there were like 2 per family, that would mean we need 25,000 units to build, to own, or to rent. And so that alone is a huge shot in the arm. On top of that, the federal government plans to increase the number of immigrants, most of whom will settle in the big cities like Toronto, Montreal, Vancouver. So tens of thousands more immigrants will also stabilize the market. We have an estimated 140,000 students and temporary foreign workers in the region, and that's going to be actually increased dramatically. So more homes needed. Fewer will be built because of various regulations. I mean, I won't go into details, but I will go into details on the 22nd of September. Here's a little commercial. We have 13 speakers, some of them from the United States. We have a speaker that actually, I call him the auction master, because he goes from auction to auction in the US. He bought several houses under $10,000. He bought apartment buildings for $30,000. He'll be one of the speakers. Here is the speaker, I'm the speaker. We had 25 booths. We were expecting well over 600 people. Okay. Now, British Columbia rocks. I mean, we have grown into something separate since the last time with NDP. People always say the NDP is. In 1998, when I wrote that book, I also wrote a story called the Yabats. Because in BC we have the tendency to always yabba everything. It's a nice day today, yeah, but tomorrow it's going to rain. Right? It's like in 1998 I had 100 reasons why BC would do well. And if you go to my YouTube channel, there's actually the old clips from BC TV of 2000, 2001 where I told everybody what to do. Buy BC. Anywhere, buy BC. Particularly waterfront, I was enamored with. So the point is, since the last time the NDP in power, we have now high tech, we have a movie industry, we have exports and constructions that all have helped a diverse and roaring economy. Our forecast GDP expansion is 3.5%. That's the strongest GDP growth in all of Canada, combined with the lowest unemployment rate and the highest job growth in the country. Our net immigration, we just talked about it. As for housing, Credit Union Central is looking for a high record since the 80s, and they're forecasting 38,000 per year in the next 2 or 3 years. Now, they may be wrong, these numbers might have been adjusted, but the point is, we are having a great outlook on the future. So, does it really matter to us what happens elsewhere in the world? If we have stability, if we have money coming in, if we have mega projects that we do. By the way, this project today in Surrey, $3.5 billion for 27 kilometers of combination of the light rapid transit with different lines. All that money has actually been put together. Government actions don't matter. CNN, Fox don't matter. Trump or Trudeau don't matter. Focus on yourself, focus on your happiness and your attitude, focus on your health. So all the news and all the government actions and all the different politicians had you about real estate, financial independence was yours, and that's what matters. Personal, individual action that you take in a confident manner because you're living in the best place in the world. All around the world, there's thousands of people sitting in our immigration offices hoping to come here. It takes them a year to get an appointment and another 2 years to get approved. And we're here. So we might as well enjoy it. You know, let's be good. The outlook for me is very positive. We're going to go through a valley. As to how far that valley is, I would say at least as long as 2009, maybe nine months or 10 years, 10 months. But I also know that the best time to buy is when the markets go down, not when they go up. Thank you very much.